Hey, what's going on? In this video, I'm going to walk you through the process of planning your trades. See, most traders don't struggle because they don't understand what's going on in the markets. They struggle because they don't plan their trades to better understand what's going on in the markets every week, every day, and every month. So in this video, what I'm going to do is quickly walk you through a simple process of just doing some top-down analysis. I'm not going to go in depth into this. This is not part of a course. This is just a walkthrough showing you step one of any trader's framework. And step two, of course, in what we do here at Elevated FX is to execute those trades, whether you're doing that manually or you're using software to help you along the process. I really don't mind. I don't care what you do. The community is designed to just be here to create accountability and give you the resources, the tools, and the training and the mentorship to help you get to the next level. All right. And then step three is to review your trades so that you can learn from them. Everybody's personality is different. Your goals are different. Your lifestyle and situation are all different as well. So these things will be dynamic. But the first step that we want to take is we want to plan our trades. And in order to plan our trades, there's three core things we want to pay attention to. Where are we in the market? Number two, where were we? All right. And where are we going? What does this do? This helps you create a plan around pretty much your directional bias, which can eliminate confusion in the process for you. It helps you understand how to plan and place entries, and it also helps you with your stop losses, risk management, and your take profit levels. Okay, so we're going to be using supply and demand levels throughout this little walkthrough here, but what I want you to pay attention to is just the process that I'm going to do real quick. Now, looking at this chart, this is GBP USD. I could have pulled up any currency pair. It really doesn't matter. What I wanted you to take a look at is overall, which direction on the higher time frame is this currency pair going, and which direction is the trend. As we can see, most people will probably say this is all heading down, or it's been going down for a while. The structure itself is on a downward slope. That's what we want to focus on here. So we're on a 3-month chart. I could go on the monthly chart and we can see the same thing. So I'm actually going to start off on the monthly chart, and I'm going to show you real quick. I'm just using an indicator called Fair Value Gaps, FVG, by Nephew Sam. If you want to take a look at it, it is a free indicator that you can add to your charts right now, which will show you, pretty much what I'm seeing here. But I don't need to go too far into time. This is 2001 price action, and we're now in 2024. And as we can see, GBP USD is on a downtrend. All right. So what I want to do is, on the monthly time frame, I'm going to focus on highlighting a few key areas using this fair value gap indicator without making it complicated. I could go into deeper levels, but that's inside of the training. Here's all I'm going to do. I'm going to do this. I'm just going to find the highest. So as price is heading down, it's creating swing highs and swing lows like this. And when it comes back to these levels, what we want to do is we want to sell the tops of a bearish trend. All right. And you want to buy the bottoms of a bullish trend. Now, what do I mean? We want to sell the tops of a bearish trend. We do not buy the bottom of a bearish trend. This is how most traders get wrecked. What they'll do is they try to buy at these levels without not understanding what's going on. You don't want to do that. You want to focus on selling the tops of a bearish trend and buying the bottoms of a bullish trend. Now, because we're on a higher time frame, of course, at some point GBP USD was bullish for literally a whole year, so you can buy it. But that's because we would be on a lower time frame making those decisions. I'm going to focus on the fractal aspect of it, which is these higher time frames. All right. So what I'm doing here is I'm simply looking at which direction this market is going at the moment, where we were, where we are, and where we want to go. And I want to focus on selling the tops of a bearish trend and not buying the bottom of a bearish trend. So what does that look like? I'm going to find key levels in the market like this that allow me to sell the tops of these trends. Which brings me to now I can go down on a lower time frame. So currently we're on a monthly chart, and the last 2 and some change months has been pretty bullish for the Great British Pound. But as we can see, overall, the direction of this market is going down unless we break through all of these structures and start going higher. We can change our direction on the higher time frame. Okay, so what we're doing is, I'm just going to erase everything right here. I'm finding key levels. And what I mean by key levels are, this is the last up area. All right. In this trend before price made a new leg going down. Okay. So this is called a supply level. So what I'd want to do is wait for price to get to that level before placing or taking a trade. Okay. So essentially what we're doing is we're just going to mark up our charts to find these levels as price is going down. You see what I mean? This leg is going down. The last level before it went down was here, and price came back to that level before it went and created a new leg down. And this is happening across multiple time frames. The higher time frames are the ones to pay attention to, because that's the levels that the institutions that we want to trade with trade from. And as you can see, if we look deeper into this, again, we had a leg going down, came up here, broke structure again, but before it did it, it left behind a key level that you can use to plan and take a trade. Okay. I'm just going to draw that down again. And essentially, what I just showed you is a very simple version of what you would be looking for from a trading perspective to plan your trades. Finding key levels in the market. All right. Drawing them out. Let me show you on the daily time frame what I mean. Finding key levels in the market, drawing them out, and then waiting for price to get there before you plan a trade. So for instance, let's say the dollar index is bullish this week and you're short on GBP USD. This example would be a very, very good example of price going up, creating a swing, and then this candle closing below this particular price action here to shift the direction from going up to now starting to head down. And what we'd want to do is wait for the price to break that structure, right? Like so. You'd want to wait for price to break that structure right here. And instead of jumping in for a sell right away, you wait for price to pull back to the key levels that you are marking up for you to take your trades in these zones right here. Until the price changes direction again and starts to do the opposite, right? For us to buy, and I'm just gonna change this to a blue scenario. And it's really as simple as that. Everything else comes down to mindset, patience, and really planning around your routine and your schedules. So this would be an example of a solid key level that you would wait for price to break structure from. And because you have this fair value gap indicator, it clearly shows you where there's liquidity in the market if you can't see it. But this right here is called an order block. It's a supply level. And since we're bearish on the Great British Pound, you would literally wait for price to come into this level. All right. So you could either place an alert and wait to take the trade manually, or place a sell limit at this zone with your stop loss wherever you are comfortable placing your stop loss, whether it's the swing high of the whole move or the swing high of the candle that it's mitigating itself. So this setup would look like this, and you would target the next key level in this zone. So the price is wanting to move from order block to order block, depending on which order block that we're trading to and from. So I see a key level here. This simple scenario is how you could frame a trade. Now, this is not a strategy. This is not, hey, every time you see this, do that. This video is to show you that you do not take a trade unless you plan for it, wait for it, and then you will execute. That's like 99% of what makes people struggle. They just jumping into kind of everything they see on the markets. But you're not going to do that, all right? So hope this video was informational, educational, and it helped you see something maybe that you didn't. This is truly about patience. There's a lot of let's say impatient people who will lose money getting into a sell at the low of this gray candle right here, when in fact the market would want to pull back to retest this level. And that's where you and I and other patient traders would be waiting for an entry at key supply and demand levels. And we're trading from zone to zone. Okay. So what I mean by zone to zone, just to reiterate again, and you're going to see this all over the place. If you haven't seen it before, open your eyes. So price was trending down, and then at some point we broke market structure to the upside. And again, most retail traders are wanting to buy here. Remember, we don't buy at the top of a bull market. We want to buy here, right? And it's very subtle, but there is a key level here that you can clearly see, and price simply came back to that key level. And now you, as a smart trader, would be looking to buy that level. And then same thing happened over here as well. And there's another scenario here as well, where there's an order block. It created favorable price action, and price literally will give you an opportunity. You just got to be patient for it.